Prime Minister Modi, who held that mega rally in Mumbai's Ghatkopar region just last evening. The roadshow covered 2.5 kilometers, with the PM campaigning for BJP's Mihir Kotecha. Kotecha is contesting from the Mumbai Northeast constituency. And, well, it was a more than packed house, one would say.
Yeah, it's always exciting when you see the Prime Minister is in Mumbai, and perhaps it was like a mega display of what can I say? I mean, this is typical poll fever. The city of Mumbai goes for polling on Monday, and right now the election mood, so to speak, I think is at its peak.
Oh yes, indeed it is. Throngs of people, as we can see, a 2.5 kilometer road show, and that took place in Mumbai. All right, let's get a move on then, and that of course continues to remain the biggest talking point for the markets. But aside from that, we also have the global markets that we're taking cognizance of, and in particular the fact that you had the US markets in the spotlight. The April CPI inflation coming in at a print of about 3.4% on year versus about 3.5% in the month of March. So it's softer inflation. The fact that it's cooled in line with what the street was expecting, Nikunj, pretty much is spurring a rate cut hope for the month of September.
See, global cues are good and global cues are solid. And global cues, I think, really have been the high point, so to speak, for the markets. Whether it is the retail data or the kind of the undercurrent of the inflation, it clearly means that even though the Fed is not very convinced that inflation has peaked out, so to speak, the recent read in inflation, especially last evening's data, clearly seems to be indicating that there seems to be a peak or a near-term peak which we have in place. Inflation data is always the most sensitive data on which markets will react. But post-inflation data last night, equity markets reacted, bond yields, they came down, and this is a clear indication that as of now it appears that markets secretly are maybe getting ready that in the second half of this year, rate cut cycle will start very soon. So the global setup, I guess, is absolutely firm like a rock. Global bulls, I mean, the environment for global equities is so strong that global bulls cannot put a foot wrong, whether it is for Asian markets, whether it is for US markets, or for that matter even other emerging markets. So the problem is not global, the problem is local, which we'll talk about it. But thankfully for us, one end of the market, which is the global end of the market, that is strong, that is firm, and that is really the good part of the current setup.
Oh yeah, absolutely. It's a rip-roaring handover from the US equity markets, and guess what? Asia also is lapping up the same momentum. Even though the Japan GDP print is not all that impressive, there's been a shrinkage over there. But yeah, because of the soft inflation data for the US equity markets, you're seeing all across a sea of green from Asia as well. But what about our markets? It was one of those very ranged trading sessions yesterday. We closed in absolutely flat for ourselves, and we did snap that 3-day gaining streak that we had been sitting on. That said, broader markets, they continue to look lively, and a lot of earnings reactions as well. Having said that, FIIs still have not turned buyers.
Look, this week's price action, which is 3 weeks price action, is encouraging. And because we've not seen a very sharpish reversal yesterday, despite FIIs selling, it just, so the thought which you need to really, ponder over is that, do we have a technical base in place, which is that will Monday's low be respected in the near term? The downside in the market, I guess, is getting protected because of DII buying. The upside in the market is getting restricted because of FIIs selling. But despite FIIs selling, the fact that in last 3 days, and especially from Monday's low, market have seen an impressive and a very decent comeback. Are we likely to hold on to that? Considering that global cues are strong, we may just hold to these levels. If markets, they consolidate for next couple of days, and if markets like in the way how the election cycle is moving, then a case for a big short covering, at least at local level, cannot be ruled out. So the odds now are not in favor of going short. the odds are not in favor of raising cash. The odds are that if things stabilize the way they've stabilized, you may actually see a sharpish and a very strong bout of short covering. You just need the market to rediscover the level. So the downside, DIIs are buying, upside, FIs are selling. What will crack? One of the counterbalancing forces has to crack. Either FIs have to start buying or DIIs have to stop selling. DI flows are coming from SIPs. They are not going to change based on a event, or they are not going to change based on a technical level. That is like long-term commitment which Indian investors have done, which means technically FI positioning, which is short, has to change if markets like the election verdict, or if we see a comeback coming in some of the large cap dominated stocks.
And I guess once the event uncertainty is over, this very well may change, right? Because they are the most pessimistic they have ever been in over a decade.
Yeah, so the data, when you look at it and you say, okay, the positioning by foreign institutional investors in the F&O market, which is what you look at, an F&O market by foreign institutional investors is largely used for hedging. In terms of positioning, because foreign institutional investors have cash exposure, they are hedging it in the F&O market. It is the positioning is in terms of the short positions are as high as what we've seen in 2013 and 14. 2013 and 14, India was different, world was different, the positioning was different. So why are foreign institutional investors that negative? Well, if they are negative, I think, or if they are hedging, which means they right now are hedging the positions against the event. The difference between 2013 and 2014 and 2024 is that we've got a very big cushion which is coming from domestic institutional investors, and that is saving the market from any large decline, so to speak. So my limited point is that I am surprised that why FI positioning is so short. If markets like what the election verdict is, then mark my words, the same positioning will be reversed, and which will lead to flare in FI dominated stocks. And see, even if FI positioning is negative, the DI buying is so solid that I really don't expect a linear decline.
Okay, that's the view coming in when it comes to the FPI net shorts. As we've been talking about, it's pretty pessimistic, with the total FII long holding at a 71 session low. All right, let's get a move on and discuss the numbers as well and earnings. Today we'll be watching out for M&M, but summarizing what took place yesterday. And LIC Housing, it was a pretty decent set of numbers. There was a 9 rupee dividend that was declared. Somani Ceramics as well, fairly decent. Inline set of numbers included the likes of Titagarh, Sandur Manganese. Berger Paints, while revenues were okay, I think it was the operational performance that really disappointed. Dixon Tech didn't quite perform. IEX, and that's really looking at the overall earnings performance, Nikunj.
Yeah, nothing big to really write home, about. It's not like any big. If you look at the assortment right now, there is nothing which really, excepting Mankind Pharma, there's nothing which really could be called as a very large market moving number per se. I think Dixon is the only one which is an eyesore on the margin front. But apart from that, nothing big which really could be called as market moving numbers. For example, ABB sparked up the entire capital goods space. Siemens numbers cemented the entire capital goods space, so to speak. So the numbers which have come yesterday in the second half of the trade post market are within the mid cap space. Also, there's nothing which really could be called out as a standout mover or a standout loser. In NCC is again good set of numbers. It's a stock or a sector which has done rather well for itself. So that is one stock where you may see result reaction. But barring that, nothing very meaningful, at least on the earnings front, so to speak.
Yeah, small.
If you like this video, then like, share and subscribe to ET Now.